I haven't done a video like this in a long time, so let's do an annual roll-up to start off the new year, and I'll go over each and every one of my investment accounts. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. I wanted to start off this video by going over the PE ratio. Historically, we're at a pretty high level, 26.4. You can see we haven't gotten here very many times through history. We touched it here in 1992, touched it here in 2018, and then obviously we had a big rally into the dot-com bubble. We had a spike in PE ratio for the great financial crisis. Stocks went down a lot, but earnings stayed relatively stable, so we saw a massive outlier for the PE ratio here. And then eventually that came back to a more normalized level here in 2010 and 2011, and then rallied back to that median range in 2014. You can see that pre-COVID high was all the way up around that 40 range, and you can see the dot-com highs were here in this 40 to 50 range as well. Anytime we get above 26.4 is pretty elevated in my opinion, and then eventually we do see a period of time where we get back to that 19 range, if not lower, and that is driving my investing decisions going forward. I do think bonds are a little bit better opportunity in the short term. Not to say that stocks can't go higher, but it does seem to me that we're going to see stocks move back towards that 19 range at some point in the future, giving you a long-term buying opportunity at cheaper prices. Otherwise, moving over to my holdings, starting off with Worthy Bonds. This is a company that has struggled. Their first two funds did have some default issues. You can see that here, Capital and Capital 2 currently locked. All of my money is in Capital One, so I can't actually access any of this money. It is supposed to be fully liquid, but it's not right now. Their property funds, I hear, are currently liquid, but you can see I have zero money in any of those funds. And they did put out a recent presser saying that their parent company is selling off some assets to help refund some of these losses, as they did say that these bonds were supposed to be asset-backed. So hopefully we'll get some resolution there. Right now I'm not investing in them. I'm just sitting on this waiting to see what happens. Moving over to Lending Club, they stopped their retail investing a long time ago, but I'm still sitting on some loans waiting for this to pay back. I'd continue to make a little bit of money on it every single month, which is fine. Just takes a long time for these notes to pay back. These are personal loans with variable terms, and it has been a few years. And I think I have about another year or so until all of this money pays back. Moving over to Groundfloor, I have about $11,300 in this account. You can see I'm currently invested. I only have about $7 cash on hand, and you have to have a minimum of $10 to invest with them. So I'm fully invested. So far in terms of returns, I've received 9%. My expected rate was 10.7, so I did have a little bit of losses on some of these accounts, but it did not turn into an actual loss. Just a slight decrease in my expected rate. And if I get that here, then I should be in the 10% range. So still pretty good. Groundfloor continues to be a pretty good investment for me. Most of these notes are pretty short, less than a year in term. Some of them are a little bit more, 14 months, something like that. But overall, this continues to be a good investment for me. Groundfloor. And then you can see my current allocation, mostly in C notes. That's the big one. That's where you can get usually 11 to 12% returns with pretty good risk reward. D notes, higher returns, a little bit more risk. B notes, safer in that 10% range with really good returns, with still good returns. And then A down in that 8.5 range, still good, but a lower return with minimal risk. Moving over to Fundrise, you can see I have about $46,500 here. I've contributed about $59,000, a couple thousand in returns. Fundrise has been very stable, but their real estate holdings have been a little bit tough this year. They were doing really well. You can see 2019, that was a partial year for me, 4%, 7% here in 2020. Really strong returns in 21, and then 22. Really strong returns in 2021, some returns in 22, and then big down year in 23. Real estate as a whole had a tough year in 23 as rates were going higher. So I do think they outperformed the overall REIT market, but still not great. And you can see for annualized returns, that's only 3.4%. Cumulative, 16.1%. Not terrible, but there have been better places to put money. And then they have a venture fund, which is doing okay, not negative, which is good. And then private credit, this has been one of their top performers, and I continue to add to this every single month. And this is where most of my money is going right now. Strong returns every single month, big dividend payer, a little bit of appreciation does look good. And you can see those returns, 8.8%, 6.4%, 8.2%, very, very strong. Annualized return, 7.8, pretty solid. Cumulative, 25%. So everything looks very, very good on the private credit side. And then you have their shares within Fundrise. I've bought several $1,000s of this over the last few years, a little bit more than $10,000. They say it's currently worth $17,500, which is solid. Hopefully that's true. Obviously this is non-liquid and a long-term investment in the company, but they have been growing very fast. They have a lot of assets under management at this point. And I'll do a deeper dive into this platform for the new year at some point in January, but this is where I'm at right now, $250 a month. Still going mostly into that private credit portfolio. Moving over to what I call the higher yield savings account. This is a stock account, but it's designed to be mostly based on dividend returns and to conserve its value. You can see I did put a little bit of money in starting in 2019 and then continued to put money in into the 2020s. Took a little bit out in 2021. And then since then, I've been adding here slowly in the dips. Market gain, 2,300, dividends, almost 2,000. Money weighted return is 31%, so pretty solid. You like to see it. You can see about 20% or so is in real estate. Most of this is in dividend funds. I do have a little bit of growth here at 8.8%, but most of it's in value and dividend growth, 17.3, almost 14% here, 13% midterm bonds, high dividend fund, almost 8%. International shares, bought these very, very cheap with very high dividends. Those have done well. And then bank balance sheet, the only thing that's negative here, pretty small amount of money, but this is things like mortgage-backed securities, just meant to maintain their value and pay a pretty solid dividend every single year. And then some small holdings in individual stocks. I also wanted to mention I do have an M1 high yield savings account, currently at about $8,300. I do add to this periodically, but it makes about $34 a month, which is solid at this current interest rate. I think it's about 5.5%. I do like their platform as a whole. Their spend account is quite good. They also let you borrow against your stocks for a pretty cheap rate relative to what you could get a personal loan for, which is pretty valuable also. And this is my savings account with them. Moving over to my retirement account. This is my TSP account. It is a government retirement account. You can see current allocation, 9% in government bonds. That is the G fund here, a little bit over 10,000. I have 12,500 in corporate bonds, and I did add to these here. You can see other activity. That's where I sold some of these C fund, which is the S&P 500, as well as the S fund, which is a total stock market fund. I sold some of those and added them over here to bonds, as I do think those are a good opportunity still. But in terms of holdings, 48,500 and 37,700 here in the C and S funds respectively. And then you can see future investments, almost 70%. 70% of my future money is going into bonds, whether it be government bonds or corporate bonds, and only 30% going into stocks, as I'm pretty heavily weighted already at 79% stocks. And then lastly, for my investments, I do have my trading accounts. Within that, I do have my Roth IRA at about 30,000, individual trading account 76,000, and this is what I use for my daily content, which I'm sure you're familiar with if you're watching this video. Overall, I did pretty well on the year. My investments going into the year were at about 274,000, currently up at 318,000. And it's pretty interesting to see my trading account versus stocks. In July, we were at a peak. Here in September, we were at a low. I didn't do an October number here, but it probably would have been even lower. And then we rallied up into November. Either way, pretty solid gain, about $38,000 in return. That also includes money that I've contributed, obviously. I put money every single month into my retirement account with the government, as well as my Roth IRA, and then some money here and there into my trading accounts on the individual side. Overall, not bad. I do think I might start to do this content on a quarterly basis. I used to do it every single month. That was a little bit aggressive. I think quarterly is probably the most reasonable. If you do like this content, let me know, and I'll try to do it every quarter going forward. Let me know down in the comment section if you are buying stocks for the long term, or if you're holding off, or where you're putting your money in the short term for your longer term bets. Also, let me know if you like this style of content. Otherwise, like and subscribe if you got any value out of this video. I do make trading videos every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any of that content. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.